Central bank digital currencies are changing the game. Traditional cash is fading and digital currencies are taking the stage. Yet, cryptocurrencies worry governments because they're hard to control. And here comes central bank digital currencies, the heroes governments need. Unlike unpredictable cryptocurrencies, central bank digital currencies are completely centrally managed, giving governments control over the economy. But hold on, not every country is embracing this movement. Some prefer traditional freedom and cash. Who are they, and why is it that they are avoiding this digital trend? In this video, we explore the exciting finance world to find out. The surge in global central bank digital currency development can be attributed to various factors. From a predominantly first-world perspective, cash utilization is declining steeply, while digital currency adoption is on the rise. Decision-makers in the financial world express confidence that cryptocurrencies and central bank digital currencies can address business needs better than traditional currencies. However, cryptocurrencies create unease for governments due to their decentralized nature, making control virtually impossible. This decentralization is unsettling for those in power, portraying a future where governments lack influence over monetary policy, diminishing authority over citizens. In contrast, central bank digital currencies are centrally issued and regulated, providing a secure grip on monetary policy. This centralized control is viewed as an advantage, allowing governments to maintain influence over citizens. Additionally, the programmability of central bank digital currencies enhances control over exchange mechanisms. Fortunately, globally, some countries have either withdrawn or halted their plans for digital currencies. Each country around the world has its own reasons, and global central banks have different views on why their central bank digital currency projects faced problems or why they decided not to launch them in the first place. Here, we highlight 4 countries. Let's start with country number 1, Denmark. Situated in Scandinavia, the Kingdom of Denmark is among Europe's most prosperous nations and has been a member of the European Union since 1973. Using its currency, the Danish krone, Denmark chose not to use the euro. Denmark is notable for leading in digital payments in Europe, with a significantly lower reliance on cash compared to most countries worldwide. Only the Netherlands and Norway come close to Denmark's embrace of digital payments. Denmark was an early explorer in the possibility of introducing a central bank digital currency, showing interest as far back as 2016. After a thorough year-long study, the Danish central bank decided against launching a central bank digital currency, considering it unlikely to significantly enhance the country's financial infrastructure. The regulator argued that Denmark already has a secure and effective payment infrastructure facilitating instant payments. The Denmark's National Bank stated, "It is unclear how a central bank digital currency will create a significant added value to the already existing solutions in Denmark." The central bank also mentioned associated costs, potential risks, and challenges for the private sector. Denmark has currently suspended the introduction of a central bank digital currency, but keeps an eye on global developments. While not completely dismissing the possibility, the country has not ruled out introducing a central bank digital currency in the future. The second country, without plans for a central bank digital currency, is Japan. As the world's third wealthiest economy, following the United States and China, Japan also holds the third spot in global pension markets. The Bank of Japan, the country's central bank, delved into central bank digital currency development, revealing its initial report in October 2020. Following this, the bank conducted trials for its digital currency proof of concept in early 2021, concluding the pilot phase a couple of months later. Surprisingly, despite progress in central bank digital currency exploration, the Bank of Japan recommended against integrating the digital yen into the nation's monetary policy due to potential risks to financial stability. The bank clarified in an official report its lack of intention to issue a central bank digital currency, emphasizing a strong preference for cash and the widespread use of bank accounts in Japan. Also emphasizing the importance of a central bank digital currency as a public good The regulator underscored the need for it to complement and coexist harmoniously with private payment services. This symbiotic relationship, as per the regulator, is crucial for Japan to establish secure and efficient payment and settlement systems. Despite these reservations, the report acknowledged the global trend of serious consideration given to central bank digital currency as a viable future option in numerous countries. The gravity of this shift in the financial landscape, as highlighted in the report, necessitates careful attention and consideration. Country number 3 is Ecuador, one of the most versatile countries in South America. Ecuador's central bank, Banco Central del Ecuador, took an early leap into the exploration and partial implementation of central bank digital currency. In 2014, the bank officially introduced its electronic currency, Dinero Electrónico. The driving forces behind this program were twofold: to enhance financial inclusion and to diminish the necessity for the central bank to manage extensive amounts of fiat currency. By February 2015, Ecuador successfully integrated Dinero Electrónico as a functional payment method, enabling eligible users to conduct money transfers through a mobile app. This application facilitated citizens in opening accounts using their national identity numbers, with the added convenience of depositing or withdrawing funds at designated transaction centers. While commonly labeled as a central bank digital currency, some industry observers raised questions about its classification, considering it was based on the United States dollar rather than a sovereign national fiat currency. The Ecuadorian government, in justifying Dinero Electrónico's reliance on the US dollar, pointed to its commitment to a dollar-based monetary system since accepting US dollars as legal tender in September 2000. Operating from 2015 to 2018, Dinero Electrónico reached its peak with 500,000 users among a population of approximately 17 million. The project was stopped in March 2018, supposedly because of a law that ended the central bank's electronic money system. By December 2021, the law required e-payment systems to be handled by private banks. Even though Ecuador explored central bank digital currency early on, the country has been cautious about it. In August 2022, Mr. Andrés Arauz, the former director at Ecuador's central bank, warned European Union and United States policymakers about the possible disruptions caused by digital currencies. He emphasized concerns about freedom, privacy, and democracy. Country number 4 is Finland. Finland has a strong economy and is therefore one of the richest countries in the world. For those who thought China and Nigeria were at the forefront of introducing central bank digital currencies, the Bank of Finland has a surprising announcement. In 2020, the Bank of Finland released a report titled Lessons Learned from the World's First Central Bank Digital Currency, shedding light on its so-called Avant Smart Card system. This system was developed in the 1990s. According to the bank, Avant not only counts as the world's first central bank digital currency, but was also the only project that moved into active production during that time. After thorough research, the Bank of Finland started the Avant project in 1993, using smart cards similar to those in today's debit and credit cards. Avant cards came before the efforts to develop present-day central bank digital currencies. A significant difference is that, unlike current systems, Avant viewed cards as the main element rather than an added feature. The bank also asserted that the project essentially embodied a token-based retail central bank digital currency, aligning with current digital currency terminology. However, Avant became obsolete and was discontinued in 2006 due to escalating costs compared to simpler debit cards. Although it was initially free for consumers, fees were later introduced, reducing the demand for the card. Despite these difficulties, the Avant card had some less obvious advantages over debit cards. Notably, it allowed consumers to make anonymous payments, providing an alternative to creating or using a bank account. Having moved beyond its earlier central bank digital currency project, Finland now appears to support a pan-European digital currency. In August 2022, Bank of Finland Governor Olli Rehn promoted the idea of adopting a digital euro, working together with private fintech solutions, especially to make cross-border payments in Europe more convenient. In conclusion, besides the 4 countries we just highlighted, There are still other countries who remain hesitant or at least do not feel the pressure of implementing a central bank digital currency as of yet. Singapore is also one of them. They do experiment with a central bank digital currency, but also stated it is not a priority for them now. Donald Trump also stated that even though the United States is actively developing a central bank digital currency, he is not an active supporter of this development. Nevertheless, the whole world is now keeping an eye on central bank digital currencies, and no country is ignoring the new financial phenomena, even those who have already set aside their own central bank digital currency plans. While it's still to be seen how various central bank digital currencies will actually play out, it's also important to draw lessons from past experiences, with many central banks stressing the importance of coexistence between central bank digital currencies and safeguarding of individual privacy and democracy.